Start off today with a little bit of conversation again about why you need to really account for discounting your unrealized P&L. So what do I mean by this? Well, you can, I'm sure you can agree with this. Many of you, probably all of you watching this, have at some point throughout the cycle looked at your gains, looked at either your portfolio size, if you're kind of an all-in crypto guy, right, long-term cycle type of person, or whether you're just looking at the balance in your trading account. All right. At some point in time over the last 12 months, that number was the highest that it's ever been. And I guarantee you that number is likely lower than that right now for the vast majority of you watching this show. Now, there are very many reasons for that, obviously. One, again, if you're kind of an all-in type of person, invested into the coins, you know, you hold longer term positions, then obviously the market is down. So you are well off of your peak portfolio value. And if you're a trader, well, odds are, again, small percentage of you have been outperforming, I'm sure, over the last couple of months, but the vast majority of traders have not been overperforming the market average over the last couple of months. And we've had lots of opportunities over the last couple of months to get tilted, to revenge trade, to do all of these kind of negative, harmful behaviors to your overall net equity that are going to reduce that max portfolio value. So I want to talk about the fact that you always need to discount that max portfolio value. Anytime that you are looking at that number in your account, you need to realize that there is a vast difference between the unrealized P&L in your account or on a trade and the money that's actually going to go into your bank account that you're going to be able to spend and improve your life. So let's talk about that. Why is that the case? Well, the reality is that nobody, not the best trader in the world, not the best firm in the world, is able to accurately predict what is the exact market top. The people who actually nail the market top generally do so by accident. And it's not as if there's this secret cabal of individuals where they absolutely time the top and then everybody else is just down from them. Everybody is on a spectrum. We're all on the spectrum, but everybody is on a spectrum of how well they're able to manage their capital, to extract value out of the markets. And this is going to be true for your trading strategy. And this is also going to be true for, of course, holding your full port in crypto. But you need to discount that max portfolio value because the reality is that you're not going to sell the top. You are going to sell a pullback. And invariably, when we get towards the end of a cycle, what often happens to just about everybody is that we're unable to and really predict or feel that this big pullback that we've experienced is the beginning of the end or the beginning of the bear cycle per se. And we've been conditioned generally by an up-only market to view all dip buying to view all pullbacks as dip buying opportunities. So the reality is often what people will do in cryptocurrency is that following the first big pullback, kind of following a market top, they will, having been conditioned to view this as a buying opportunity, either buy more at that point in time and stay in, or they will lever up. And levering up obviously is the big mistake here, but it's understandable because you've been conditioned to view these pullbacks as dip buying opportunities. And so then the market tends to go up for a little bit and then it slams back down harder. So you understand that first pullback opportunity was your first sell opportunity, right? Following a market peak. That was your first opportunity to get out at a discount. And that's already being discounted from the market peak. Bitcoin pulling back anywhere from 5 to 10 to 15%. See, that was your first opportunity to take your haircut. Okay. But now you've entered in more. The market moved up a little bit. You felt rewarded, but now it's down here. Okay. So now again, where you could have initially gotten out for a 5 to 7% discount off of your max portfolio value. And we're just talking about Bitcoin at this point in time. Obviously altcoins, we can double and triple these numbers, but now you're talking about executing for a 15% discount down here. All right. And again, do you then make the secondary mistake of doubling up or levering up, which of course are going to compound and magnify these losses? And this is going to be true in every cycle that you trade. This is going to be true no matter what your strategy is, because the strategy that performs very, very well in an up-only market, that buys every pullback, that aggressively longs every breakout, that strategy will not make money over the last couple of months. It just simply won't. And one of the best indications you can have for, is the market cycle switching, is the market cycle changing, is that most of you should have two strategies. You should definitely have one, which is your higher time frame trend following strategy. That is the most successful strategy in cryptocurrency. It allows you to receive the large amount of gains, and cryptocurrency is a momentum based asset class, i.e. these trends can persist for very long periods of time. And if you're a kind of, 2% profit target type of trader, well, that's fine, but you will always, invariably, almost always lose money in a raw P&L term to a similar strategy that simply just holds for a longer period of time. Ichimoku, moving average strategies, simple MACD crossover strategies, what have you. Those strategies actually perform very, very well in a bull market. And this is why, thus the saying, everybody's a genius in a bull market, because even the simplest strategies that you can go on YouTube and Google, and they're like, hey, what's the easiest trend following strategy? Oh, well, when the MACD crosses and these moving averages cross over, that shit actually works in a bull market. And everybody feels like a genius. Everybody feels like a trader. People quit their jobs and become full-time traders. You know what I mean? But see, the problem is that the reward that you get, the education that you get from that, the success that you get from that, that evaporates. It's not as if it dwindles, it evaporates in a bear market. And people are often very, very slow to accommodate or shift. So two strategies. The higher time frame trending strategy, which is hands down perfectly like the simplest and best strategy that you can have in a bull market in cryptocurrency, and you should always focus on creating that first. Even if you're in a bear market, your focus should not be on how can I make money per se right now. That should be your second focus. Your first focus should be how can I really make a ton of money when we get into another bull market, following whatever cycle we're on, the 4-year cycle, the 2-year cycle, the halving cycle, the plan B, whatever cycle you want to follow. Bitcoin moves up and down on a cycle, as do stocks. And so that's the first strategy you should always have perfected. Your daily, 4-hour, higher time frame trend following strategy, weekly, daily, 3-day, 5-day. I don't care. It doesn't matter. Go out and build the goddamn thing. You'll thank me later. But following that, especially if you want to get into perps, you can really maximize your profit, increase the amount of profit that you can extract out of the market if you then do focus on a lower time frame, 15-minute, 30-minute, 1-hour trend following strategy. Because it will allow you to catch those punctuated movements with higher leverage, with higher position sizing, lower holding times. And so those are the two strategies that tend to work insanely well for everybody in a bull market. Even the simple buy and hold works really, really well, except at the end, because they don't know when to sell, because they don't have exit criteria and they're greedy. And so when your lower time frame trend following strategy stops working really well for, let's say, a month or two, or a month or 2 weeks, that is your clear sign that something is fundamentally happening to the market structure, to the market cycle that you're currently in. And it's probably time for you to adjust. Okay. And I've gone over this very many times, right? Everybody is really obsessed. All of the content that you're seeing right now on X, on YouTube, all of these idiots, they're just like, oh, the bull market's coming any day. It's going to turn around any moment. Could you imagine not buying right now with Eric Trump bull posting Ethereum and Vitalik and this and that and Donald Trump? These people do not have your financial best interest at heart. They don't know shit. Okay, because they're not traders. Everyone bull posting right now, and I don't want to be Mr. Negative. I don't want to be too bearish, right? I really don't. I hope that the bull market continues. But all of these people who are constantly bull posting all of this nonsense, making you think that you're an idiot for not buying right now, for not buying every dip, they're not really trading. Okay? they're making money off of content. They're not making money off of their ByBit account. And they're just bull posting for two reasons. One, because bull posting generates a lot of volume. It generates a lot of social volume. The social media metrics on this are very clear. All right. If you bear post, if you're like, oh, people hate it, they don't engage with your content, they don't want to hear it. They don't want to hear that bear posting nonsense. But if you bull post, we could be in the depths of the bear market, right? Or let's not say the depths of the bear market, because then bull posting might actually make sense. We could be at the beginning of the bear market, looking down the barrel at 18 months of downwards price action, and bull posting content is going to get, oh my God, yeah, you're so right. Like, we need to, why could we possibly be bearish on Ethereum right now? It's going to get a lot of social volume. It's going to get a lot of traction, and content creators make money off of volume, just like exchanges make money off of volume, just like sales companies make money off of volume. It's all about volume. So you have to remember and understand that all of these content creators on the internet who are bull posting right now are just, one, posting for social volume, and two, posting because if they're right by luck, then they can go back and be like, oh, can you see? I predicted the bottom. Follow me. Buy my course. Blah, blah, blah. By the way, buy my course, link in the description. And there's no accountability, right? There's no accountability. 99% of their followers are not going to hold their feet to the fire and be like, well, yeah, dude, but like, you bull posted for like 6 months straight. You know what I mean? Even a broke clock is right twice a day. There's not that level of accountability for content creators in the cryptocurrency space. I'm sorry to tell you this, because people want to hear what they want to hear. And what they want to hear is that their unsophisticated trading strategies of buying crypto and hoping number goes up is successful, is the right strategy. And it's not. It's not, right? This is why you wash out. This is why people wash out of the game. And this is why every single cycle, you know what I mean? Like, we get a wave of new retail traders coming in thinking that they're geniuses towards the tail end of the bull market, and they very, very quickly get washed out. So I'm not saying that the bull market's over. I'm not saying that this or that. I don't know any better than the rest of you. I'm a systems trader. When my system gives me a signal, I take the signal. My job as a systems trader, as a strategy creator, is to understand the metrics that I need to see to understand when I need to shift my strategies from trend following bull market to trend following bear market, which we're not there yet, to mean reversal trading, which is basically where I'm at right now, because we're essentially just trading volatility. That's where the alpha is right now. And there's nothing wrong with continuing to run your trend following system, but other adjustments you can make are, of course, reducing the position sizings that you take or the frequency of trades. Cooldown timers are a very good feature right now. Max drawdown over a period of a week or a period of a month are absolutely essential. Everyone who goes through the Pathways to Profit course gets a spreadsheet with the cardinal sins of trading. And over trading is one of those, right? You have to have a limit on how much you're willing to risk per week, per month, per day. And you have to follow those rules. And you have to be humble enough to understand that if you want to trade, if you want to be a trader, or if you want to be a pajama trader, everybody wants to do it. Wake up whenever we want, sit in front of the computer, take some trades, make some content, you know, never have to put deodorant on, right? Don't talk to people. It's a great job. Okay. But it's not easy. It's not just this wave. It's not this open fountain of milk and honey that's going to come into you for absolutely no effort. You've got to be smart about it, because there's some very smart, dedicated, talented people, and the market is remorseless. It will take from you without even thinking about it. So, in summary, be very wary of bull posting. They don't have your best interest in mind. Always focus on building that higher time frame bull market strategy first, because at the end of the day, over the long run, over the years and months, that's going to make you the most amount of money. And two, just be aware of the signs and signals. They're not going to come from your technical analysis. They're not going to come from your fundamental analysis of the market. They're not going to come from monitoring the headlines or this or that, or speculating on what Trump will or will not do, what effect tariffs will or will not have on the market, what the bond market's doing, what the yields are doing. None of that stuff's nonsense. Give it all up. All right. You got some of the best professionals in the world that are doing that stuff. And at the end of the day, they're basically guessing. All right. So what makes you think that you, sitting in your mom's basement basement is going to do any better. I don't think any of you are watching this from your mom's basement. This is not a mom's basement kind of channel. I apologize for that. That was a lot. Sorry. As a systems trader, you have the ability to avoid all of that nonsense that people rely on generally, because they don't have what you should have, which is data from your strategy. How is my strategy performing? How have the last 10 trades for the strategy gone? How have the last 5 trades on this particular asset gone? What is my average? What is my win rate over the last year? And then what is my win rate over the last month? And what data, what in there should tell me that something is different and I need to make an adjustment? You can't just run the same strategy day in and day out.